Ladies and gentlemen, good day and welcome to KIMS Hospital Q1 FY25 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in a listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jivani from IIFL Securities Limited. Thank you and over to you, sir.
Yeah, thanks. Good morning, everyone. This is Rahul from IIFL Institutional Equities. I welcome you all to the first quarter earnings conference call of KIMS Hospitals. From KIMS, we have with us Dr. Bhaskar Rao Bolineni, Founder and Managing Director, Dr. Abhinay Bolineni, Executive Director and CEO, and Mr. Sachin Salvi, Chief Financial Officer. Over to you, sir, for your opening comments.
Let us start on a happy note. Today, 8th August, is a very important day. It happens to be a National Happiness Happens Day. So I would like to present the financial and operational details for the quarter 125. I am sure the results will make you happy. The gross revenue of INR 693 crores, a growth of 13.8% year-on-year and 8.7% on quarter-on-quarter basis. EBITDA of INR 184 crore, a growth of 14.9% on year-on-year and a 13% on a quarter-on-quarter basis. EBITDA margin at 26.6% versus 26.3% in quarter 1 FY24 and FY25 and 25.5% in quarter-on-quarter 24. EBITDA margin excluding other income stands at 26.1%, a growth of 0.1% on year-on-year and a 1% on quarter-on-quarter basis. PAT at INR 95.1 crore in quarter 125 against INR 86.7 crore and INR 71.6 crore in quarter 1 FY24 and quarter 4 FY24 respectively. Consolidated EPS of INR 10.8, a growth of 7% on year-on-year and a 32.1% on a quarter-on-quarter basis. The average revenue per operating bed grew by 21.3% and 12.2% on year-on-year and a quarter-on-quarter basis respectively. Average revenue per patient grew by 6.1% and 1.4% on year-on-year and a quarter-on-quarter basis respectively. IP volume grew by 7.5% and 7.1% on year-on-year and a quarter-on-quarter basis respectively. Conducted 4.2 lakh OPD consults in quarter 1 FY25, which grew by 10.2% on year-on-year and 2.6% on quarter-on-quarter basis. On the last quarter, I apprised you about our setting up a 290-bed hospital in Thane, Mumbai. Again, today I would like to inform you about yet another new acquisition at Vizag. Queen's NRI Hospital, a 200-bed hospital at prime location in Vizag. It was established in 1995 with a built-up area of around 150,000 square feet by a couple of doctors. The hospital is in a densely populated locality with a good potential. KIMS already have a multi-specialty hospital and a gastro unit at Vizag, and this addition will help it garner a larger share in the market. Besides, the hospital is situated in a prime locality, which makes it an attractive proposition. KIMS entered into an agreement with the owners of QNRI to purchase 100% holding in the company. The addition of new hospital will make the chain of our hospitals longer and stronger. Our Nashik hospital is due for inauguration in this quarter. All other projects are progressing well according to the timelines. You all know that we are making a clinical achievements I keep mentioning in all these investors presentation in the district headquarters hospitals. all are doing very well so that the patients need not go to the higher centers. That is one of the prime motto of KIMS, that we need to be able to cater more care towards the patients at the district level itself. We got few awards. KIMS has made a name in organ transplantation, having done about 190 lung transplants in 3 years, which is an all India record. Last year, the entire lung, all the transplants put together, we did 259, which is the highest number in Telangana state. I am happy to inform that KIMS Secunderabad is awarded Best Brainstem Death Certifying Team for South Region by National Organ and Tissue Transplant Organization, Government of India, and a function held on 3rd August at New Delhi, which was presided over by Honorable Union Minister of Health and Family Planning, Sri J.P. Nadda ji. This is an important recognition of our commitment and excellence in the field of organ transplantation. It is not only the transplantation, we are trying to create an awareness national level. We are the leader in the lung transplant. That's why we need to improve the awareness among the hospitals about the importance of the organ donation. So we thank the government for this honor. You are aware that at 18% GST is levied on life and medical insurance premiums. Recently, the Union Minister of Road Transport and Highways, Shri Nitin Gadkari, has urged the Finance Minister to consider withdrawing of the above tax. It is a commendable move, as it will help in making healthcare more accessible and affordable. It will reduce the cost of insurance premiums, paving way for increased insurance penetration that can lead to more inpatient and outpatient coverage and service at hospitals, and more patients will come into the purview of the insurance, so that the affordability will improve. More and more people will utilize the hospitals for their diseases. It is hoped that government will take favorable decision that will have impact on providing wider insurance coverage and health benefits to people. We are in the middle of Olympic Games. Our congratulations to the players from all over the world participating in Olympics, and especially to our Indian players. Special congratulations to Manu Bakar, Vinesh Phogat, and Neeraj Chopra for their outstanding performance. Let us congratulate all the winners and hope that our players will bring more medals and glory to the nation. Who will ever imagine that a mere 100 grams can make a world of difference? It is unfortunate that barely 100 grams of extra weight had deprived our Vinesh Phogat of a possible gold medal at Olympics. In any case, she made history without a medal, and the entire nation stands by her for her valiant fight. We are just 1 week away from our 78th Independence Day. I take this opportunity to convey Independence Day greetings to all you in advance. Thank you very much. Opening for the questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amrya from JM Financial. Please go ahead.
Yeah, thank you so much. It's Amrya from JM. So congratulations to the management on the good set of numbers. And the slides we have taken on the transplant side. So just first question I have on the RPOP. So our RPOP for the quarter has grown substantially at around more than 20%. It seems to be led by the Telangana and Andhra region. But here the occupancy has actually come down. So is it possible to explain the dichotomy here, like what has changed here in these specific hospitals during the quarter?
So, Amey, thank you for the question. If you actually look at the IP volumes, there has been consistent growth in IP volume. ALOS is something that because of high occupancies in Andhra, in some of our hospitals, we've been constantly working and trying to bring down the ALOS. And if you look at quarter on quarter, we have been trying to reduce the ALOS. And this quarter also, we put consistent efforts to bring it down. So, and that is the reason why the ARPOB has gone up. But I think we should pay more attention to IP volume growth and ARPP. That will be a true indicator of this.
So, is there a change in case mix, like higher volumes from the oncology, etc., which would have led to this change, or something related to case mix, which could be driven?
Nothing very significant change in the case mix. There is some marginal improvement in the payer mix. The incremental revenue that came from a cash and insurance payer, where the loss is less. So that is one contributing factor. Our constant endeavor to reduce the length of stay for scheme patients, especially corporates and ROGS3, is one function. So result of these two, the length of stay has come down. But like I said, again, we should pay more attention towards ARPP and IP volume. That's honestly a measure of what the growth is on a quarter-on-quarter basis.
Sure. The second question I have is, we have changed the way we used to report occupancy. Now we are showing it on the capacity basis. So it has overall also it has come down. So at a hospital level, it is also very substantially low. So is there any indication you can give what optimal capacity utilization or occupancy would be for our mature hospitals going ahead?
I think based on the feedback that we got from investors, we had removed one layer of reporting there, and we're just now reporting occupancy and total bed capacity. But a healthy occupancy is around 70%, 65-70% is a healthy occupancy.
Sure, and that would be on the
bed
with the new formula. Yeah. Okay.
Yeah, on the bed capacity.
Oh, sure. Thank you so much. I will join back.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question is from the line of Abdul Qadir from ICICI Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Sir, just to understand the ALOS reduction better, so taking from the previous participant, so what are the factors actually which has contributed to this reduction in ALOS? And could we, in the near term, kind of build this kind of a reduction, or this was more specific to this particular quarter?
I think we can sustain this kind of a number, but further reduction, we are putting constant effort to see how we can further reduce. So there are 2-3 factors that drive ALOS. One is that the incremental revenue that came from a payer mix, which is cash and insurance, that is large, where the ALOS is predominantly low. Number 2, the case mix within the quarter could be one contributing factor. And we are also putting effort, especially in Andhra, where the ALOS has been high. Because of significant volume of patients coming in from the government sponsored scheme, we are putting constant effort to see how we can reduce that length of stay because of a lot of documentation process that is involved. We're trying to make things more efficient there.
Got it. And secondly, on the margins on the Telangana cluster, so though there is a sequential bounce back in terms of the margins, but it still continues to be a little lower than where we were. So any color here, where the peak margins can touch, or would an absolute increase in EBITDA margins still possible from where we are in Telangana?
Yeah, there is going to be an expansion of EBITDA margin, but at this point in time, we're investing on a lot of new programs. So if you look at, we've started a new program called for rehab services in KIMS Secunderabad. We have onboarded a lot of doctors recently in the last 2 quarters. So there is a drag of almost 1.5 crore per month from the new doctors and from the rehab program. So once the growth in revenue happens and there's some maturity there, things should bounce back to a 30+ kind of an EBITDA margin. And also there is some corporate hiring and corporate expansion that will continue to remain the same. But as revenue grows up, the margin expansion will definitely happen at Secunderabad.
Got it. Thank you and wish you all the best.
Thank you. The next question is from the line of Dhyamati Kirai from HSBC. Please go ahead.
Hi, good morning. Thank you for the opportunity. My first question is, can you update us on some of your upcoming hospitals? So Thane, Nashik, and maybe update on the Bangalore facilities, about the progress, and are you on track to launch these as per the timeline indicated earlier?
Yeah, I think all Bombay and Bangalore, we're pretty confident we'll be able to launch them by the fourth quarter of the financial year. So far, we don't anticipate any delays in either of the projects. Both the projects in Bangalore and in Bombay, we don't anticipate any delay at this point in time.
And Nashik, you mentioned you'll be shortly inaugurating it.
Nashik, we're fully commissioned and fully ready. We've onboarded a few doctors. We're just waiting for the final OC occupancy certificate from the local authorities. We should expect that post August 15th, and then we're ready to start.
And how many beds you will start with in the Nashik?
We'll start with around 75-80 beds. We will operationalize 75-80 beds. And but the capital for all the 250 odd beds is fully incurred or is in the process of getting fully incurred. What we mean by operationalize is we will have manpower only for 70-80 beds. As the occupancy goes up, we will keep adding more manpower.
Sure. My second question is on your efforts to improve mix, especially in the AP region. So I guess you earlier were focusing on oncology and mother and child care to really improve the margins or mix, etc. So again, like some updates, like have you implemented it across the hospitals in AP region?
So, like in the investor presentation, we have 3 units that will add cancer and mother and child by end of this financial year. We have acquired Queen's NRI, which is a hospital that also has cancer. So the Vizag geography that will take care of the needs for cancer care. And the remaining geographies, out of the 6 other geographies, 3 of them we will operationalize cancer in this financial year.
Okay. And my last question is on your funding for the capex which you have planned. So I understand again you're relying a lot on your internal accruals to fund most of the projects. So is that the case? And in case like you have to borrow, what kind of cost of borrowings, etc. you are seeing?
So as far as the cost of borrowing is concerned, as of now our average cost of borrowing is about 8.5%. We anticipate that it remains in the same range. We are trying to fund as many projects as possible from our internal resources. As we have said in earlier discussion also, that we intend to keep our debt equity ratio within the range of 0.75:1. So that remains.
Okay, that's helpful. Thank you.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Naman Bagrecha from IIFL Securities. Please go ahead.
Hello. Am I audible?
Yes,
hello.
You are. Please go ahead.
Thanks. Congratulations on a strong set of numbers. So just wanted more, dope on the acquisition, the Vizag acquisition in terms of what kind of current revenues are and over the next 3 to 4 years, what kind of scale up do you see? and also in terms of margins and current ARPOBs? I mean, you've mentioned in the slide that the potential ARPOBs will be around 38,000-42,000. So wanted to know more in terms of what is the economics currently, and also as you mentioned that this was started by doctors. So what has led them to sell this hospital to us?
Yeah, so I think this was started by a family 20 years ago. And I think the second generation was not very keen on taking things forward, and they were also settled outside the country. So then they decided to divest the hospital and go back to UK with their children. But coming to the hospital, it's currently doing a revenue of around 65-70 crores. At a point in time, it used to deliver a revenue of 120-150 crores. But given that competition came in and a lot of doctors left the hospital because they didn't see growth, we feel that the potential for this hospital, given the excellent location, is close to scaling up to almost 250 crores of revenue over a period of 3 to 4 years' time, with a very healthy EBITDA margin. We plan to do just cash and insurance in this hospital. We don't plan to focus on any scheme patients in this facility. We have another hospital which is just 10 kilometers away from this facility. We'd like to continue to do all scheme work in that hospital and continue to focus on building the cash and insurance here. And that's why we believe that the ARPOB could be in the range of 40,000-45,000. And the idea is to also make it a center of excellence for cancer and transplant services in Andhra Pradesh.
Sure. So currently the ARPOB would be around 38,000, and we would like to...
Currently the ARPOB is around 20,000.
20,000.
Given that 30% of their income currently is from scheme patients, that's why the ARPOB. But if you look at the ARPOB of our Vizag unit, which does cash and insurance, the cash and insurance ARPOB is around 35,000 per bed per day. We are anticipating it to be slightly higher given the geographical presence and given the kind of work that we want to do in cancer and transplant.
Got it. So what kind of, let's say, additional or incremental capex would be required to add these specialties like MNC, oncology, etc. that you mentioned?
All the technology is already there. It's a running hospital with cancer services. So there is nothing on the medical equipment that we'll have to do immediately over the next 2 years, 3 years. But after 2-3 years, we might have to do a refresh on the entire medical equipment. But at this point in time, we'll have to renovate the facility to bring it to the standards of what a KIMS hospital would typically look like, which could incur a capex of 20-25 crores. But on the medical front, I don't see a major capex happening over the next 24 months.
Mm-hmm. Mm-hmm. So also, on this one, what could be the current margins and the scale up you're seeing?
The margin currently is around 8% on a 65 crore kind of a revenue. And we believe over the next 3 to 4 years, we should be able to get to a 250 crore kind of a revenue in this hospital.
Okay. So my next question is more is regarding to the previous participant's question. There has been a sharp decline in ALOS. So I mean, this is my understanding correct? Is that the scheme patients which were spending or staying for a longer period, that has now reduced, or something else has happened this quarter? So just wanted to understand on the ALOS bit, this quarter we see a sharp decline in ALOS. I missed your opening comments to a participant where you highlighted that it was because of scheme patients now having a lower ALOS. Is this correct, or my understanding is completely wrong?
Yeah, that is correct. So multiple factors for that to happen. But one of the strong reason is because we're focusing on reducing the length of stay for scheme patients. both Arogyasri and public sector companies. But the other reason could be because of the change in case mix, and payer mix. The incremental revenue that came in from a payer mix where the ALOS is substantially lower than the average.
We believe that this would be sustainable for the balance 3 quarters of this year, or we could.
It should be sustainable with 0.5%.
Okay. And just a last one before I get back to you. You mentioned that 65-70% kind of occupancy on total bed capacity is what we'll be looking at, and currently Telangana and Andhra Pradesh would be closer to, let's say, around 50%. So what kind of, in terms of by when can we achieve the 65-70% kind of number on a full year basis?
I think so. In Andhra, there are one facility where we have almost only a 30% occupancy. It is because we don't do any scheme work there. It's only focused on cash and insurance. That facility may not go up to a 70% ever. It's just that even at the 30-35% occupancy, we've been able to do healthy numbers. The other, there are some hospitals that are at 90-95% kind of an occupancy. A blend of what you're seeing is at 52-53. But over the next 3 to 4 years, we should be, and the current capacity, we should be able to get to that kind of an occupancy. 70%, 75%.
Okay. Thanks a lot, sir. I'll get the same.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Am I audible?
Yes.
So just on this Sunshine, there has been significant uptick in terms of IP volume, both year-over-year as well as quarter-over-quarter.
The voice is not clear, Tushar.
Is this better?
Mr. Tushar, could you please use your handset?
Yeah, is this better?
Can you move a little far away, the handset?
Is it better?
Yes, sir. Please go on.
Okay. So just on this IP volume for Sunshine, there has been significant increase both year-over-year as well as quarter-over-quarter. If you could shed some light on this aspect.
So, Sunshine, like we had always said, once the new facility comes and we stabilize, we'll be able to show growth in revenue. And we moved into the new facility in December, Jan. And, the last quarter, we needed time to stabilize that hospital in the new facility. And after we moved there, onboarding of doctors, growth from the existing specialties led to the growth. In fact, I think Q2 will be even more promising in terms of how things are shaping up at Sunshine.
And so subsequently, sir, what do you think the ARPOB would settle at as we ramp up in terms of patient volume?
I think since Sunshine is a cash and insurance based facility, the current ARPOB levels will sustain.
But then can that be scoped to further higher ARPOB?
Because we'll also be adding a lot more specialties where the ARPOB could be, because here it's still currently heavily dependent on ortho where the ARPOBs are higher. So since we'll add a lot more specialties, it could be at a much lower ARPOB. So to assume that we'll sustain the ARPOB is the reason.
Understood. So on Telangana front, both at least IP volume has been very stable. I've not seen much of increase. Occupancy also sort of dipping. And both even in Andhra Pradesh as well, the IP volumes have been pretty stable. So any particular reason to call out?
I think once we add in Andhra particularly, once we add more capacity, we add these specialities like cancer and mother and child, we will further see an uptick in growth, both in volume and revenue. As far as Andhra is concerned, as far as Telangana is concerned, we have taken measures to add new doctors. Subsequent quarters, there's been good growth in revenue, healthy growth in revenue. The subsequent quarters, we will see this growth as well.
Understood. And with this, at like 48% occupancy, we are at like 30% EBITDA margin for Telangana. So with the addition of new specialties or the ramp-up of occupancy, so what is the scope of improvement in the profitability for this unit?
For every incremental revenue in Telangana and Andhra, we should assume 35% of that will flow through to the EBITDA. 35-40% of the incremental revenue will flow through to the EBITDA.
Understood. That's it from my side. Thank you.
Thank you. The next question is from the line of Bino from Elara Capital. Please go ahead.
Hi, good morning. Wondering if any of your specialist doctors have moved from the Secunderabad facility to the new Sunshine facility?
No, nothing. No one.
Okay. Sunshine is all fresh recruitment.
Yeah. No one from KIMS.
Okay. And the shift out of the old facility has already happened fully?
Yeah, it's fully done. It was done in January itself, fully done in January. We just needed some time before all patients got aware that the facility is now moved. And after that happened, we've seen good uptick in revenue.
Okay. And what's the plan with that old facility?
So we've started we had demolished Block 1 and Block 2 in KIMS Secunderabad. We have now shifted some services to that facility. We've started a rehab program. And after 3 years, when the new facility of KIMS Secunderabad is ready, we will then shut that and hand it over because it's a leased premises.
Okay. And so that old facility revenue is also now reported under the Sunshine or under KIMS Secunderabad?
KIMS Secunderabad.
Okay. So the old Sunshine facility revenue is under KIMS Secunderabad.
There's very little revenue coming in from there because we've only moved some back in specialties. But whatever is coming in KIMS Secunderabad.
Okay. And what's the update on Nagpur? Is it now stabilized? Can we expect a steady performance at the levels what we are seeing right now?
Yeah, I think Nagpur has stabilized. There will be margin expansion further. In fact, there have been some one-time costs in this quarter. If not, it would have been a 11 crore kind of an EBITDA on a 53 crore revenue. On a 52 crore revenue, we would have done 11 crore EBITDA. I think things are now quite stable there. We are actually planning to do a further capex in Nagpur. We'll come up with a plan soon where we expand the total number of beds and we also add cancer as a service.
Understood. Thank you very much.
Thank you. The next question is from the line of Rahul Shivani from IIFL Securities. Please go ahead.
Yeah. Dr. Abhinay, can you talk about these incremental hirings which we are doing on the corporate side? So the ex-CFO of Aster has joined you. So what are your broader plans in terms of, let's say, some of these senior corporate hires?
So, like we've always been indicating in the past, there's a very strong team that's coming to build out the Karnataka story. I think Srinath is officially on board. We'll soon have the rest of the leadership join us. We have Dr. Nitish who will come on board as the managing director and the CEO of that cluster. He was with Narayana Hrudayalaya for 20 years, with Aster for 10 years. So we are expecting a very strong traction from the local doctors and his leadership for the entire Karnataka story. So that's why we've always been very confident about building that story. And we've gone ahead and invested on 2 hospitals. We plan to do a few more in Bangalore once these 2 hospitals stabilize.
Sure. And Dr. Nitish and Srinath, have they invested equity into the Karnataka cluster? And in terms of, let's say, our plans for doctor hiring for the 2 Bangalore hospitals, how have those been progressing?
So far the doctor hiring, the traction is quite good. I think given their roots in Karnataka for the last 25-30 years, and their connect, Nitish himself being a doctor, and their connect with the local doctors has been quite helpful. And with the KIMS model and the equity model, things look very promising. But again, since we're 6 to 8 months away from commissioning the hospital, it will be too early to comment. But I think overall, there is a lot of positivity for both the hospitals and the kind of facilities that we're building, the kind of specialties that we're coming up with in Bangalore.
Sure, Dr. Binay. And in terms of equity, are these guys investing equity into the Karnataka cluster?
Yeah. So the way it's structured is they hold a parcel of land in a place called Sajapur, where we intend to build a large health city, but over a period of time after we stabilize these two. So that has been valued at a fair market value, and that will be brought on board as equity, and that will be their share of contribution. And as and when more capital is required for the cluster, all parties will get diluted respectively.
Sure. And by when do you expect to start, let's say, building out this new hospital in Sarjapur?
No, I think the first plan is to stabilize these two, show investors traction and gain confidence, and then we announce further expansion in Karnataka.
Sure, Dr. Binay. And one last question from my end. In terms of overall occupancies, obviously the dip which we have seen this quarter has primarily been driven by, let's say, the lower ALOS. Now, in terms of this optimal capacity utilization, which you indicated would be 65-70% kind of a number in 3 to 4 years, what kind of an ALOS number should we be working with for this 65-70% capacity utilization?
I think the current ALOS 3.9 is what is 3.62 is what has been reported. Anywhere between 3.6 to 3.8 is what is a definitely sustainable ARPOB. ALOS.
Sure, Dr. Binay. I will join back the queue. Thank you.
Thank you. The next question is from the line of Tyamati Kerai from HSBC. Please go ahead.
Hi. Thank you for the opportunity. I just have one more additional question. So just want to understand what is plan to reduce promoter pledge. Like right now, there is notable pledging of promoter stakes. So what are plans to unwind this?
So what's happening, the promoter pledge, what we are looking for now, we are approved by the board. We are going to the AGM that the main promoters who are there, who are having a different business, that is infra, then their shares has been pledged. So we are going to make them public so that the main promoters and KIMS will not have any pledge maybe by end of this quarter, next quarter.
So it's reclassification of the some of the promoters. Okay. So this will happen by end of this quarter, second quarter.
We approved already by the board, and SEBI has been informed. Once the AGM, which is in 29th of this month, after that maybe it takes about a couple of weeks.
Okay. Thank you.
Thank you. The next question is from the line of Gagan Tareja from ASK Investment Managers. Please go ahead.
Okay. So good morning. My first question is on the ARPOB, which is up almost 21% year on year and 11.5% quarter on quarter. If the case mix has not changed much, is it reasonable to infer that most of the ARPOB increase is coming from an increase in tariffs and increase in procedure rates?
No, the ARPP, Gagan, remains to be constant. It is a function of 2-3 things. Like I said, one significant driver for it is to reduce the length of stay for scheme patients. Number 2 is that the incremental revenue came in from payers, which is cash and insurance, and from procedures where the length of stay has been lower. So these 2 things have been contributing to this reduction in ALOS. I think moving forward, a good base would be around 3.6 to 3.8. That range would be a good ALOS to assume. We have not taken a price hike in the first quarter. We have done some price hike in July, but not in the first quarter.
So what was the price hike in July? One, and secondly, your insurance rates are also, I think, due for revision. Is that also contributed?
Due for renewal. We're expecting that to happen in August itself. But again, this has been delayed for quite some time. Unless it happens, we are not too sure about this.
Okay, because it's a very substantial jump and very difficult to sort of fathom how that sort of works out.
We've got multiple timelines from the association, and we're yet to see that happen.
Second one, sir, you will be commissioning 4 hospitals, I think, all put together in the last quarter of the year or perhaps first quarter of next year. So cumulatively, what will be the addition to the fixed cost and gross block because of these?
So as far as the gross block is concerned, the total addition on account of Bangalore, Nashik and Thane would be about some 700 to 800 crore plus.
And the fixed cost addition?
Fixed cost per center, other than doctors and consumables, the cost per center will be around 6 crores, which is your cost for HR and your other expenditure per center. So we have 3 centers, Nashik and Thane and 2 Bangalore. Between these 3, we'll have an 18 to 20 crore kind of a fixed cost. This is other than the cost of doctors and consumables.
And what could be the absolute increase in debt over the year as you sort of invest into these facilities? What's the current gross debt and how does it move?
The current gross debt is about 1,150 odd crore as on 30th of June 2024. By the year end, when we are commissioning all these hospitals, we'll be having a debt of about some 1,600 to 1,700 crore. This is the number.
Okay. Fine. Thanks, sir. I'll get back in with you for more if need be. Thank you.
Thank you. The next question is from the line of Amra from JM Financial. Please go ahead.
Yeah, thank you for giving me an opportunity again. I have one question on the positioning of our hospital chain. So, few years back, we were considered as a affordable care category brand in Telangana, Andhra. However, over a period, we have seen this gap between the premium hospitals and affordable being reduced a bit as we have increased our case mix, also in terms of upkeep of hospital services provided, etc. So, is there a concerted effort towards improving our brand and moving towards a bit of premium brand? And also, if you can guide us on the positioning of this. And also, when you move to the different regions, will you try to keep the brand positioning similar in these regions, or you would go with the needs of those particular localities? Thank you so much.
I think we are continuing to stick to our ethos, which is to be affordable. We are trying to be affordable across all the services that we offer. So we are a quaternary tertiary care provider. We will offer all these services. As we offer, the ARPOB will continue to go up. I don't think we believe in anything such as a premium priced hospital or an affordable price, a premium size hospital. We're very happy with the way we are positioned, the kind of case mix, the kind of ARPOBs that we deliver, and we continue to focus on that space.
So, but regions like the high-tech city, Kondapur, etc., which are getting populated with high-income residents, etc. So, even in these regions, you would keep the hospital as an affordable care hospital, or there you would go with the needs of the region?
No, I think even so in Kondapur, we have been present in that geography for the last 10 years. For us, the pricing in Kondapur or the pricing in Secunderabad remains absolutely the same.
Sure. Thank you so much. I will join.
Thank you. Participants who wish to ask a question may press star and 1. The next question is from the line of Harith Ahmed from Avendus Spark. Please go ahead.
Hi, good morning. Thanks for the opportunity. So for the new hospitals that's coming up at Nashik, Thane and Bangalore, could you give a sense of the kind of ARPOBs that we're expecting there? Will it be in line with our current level of around 37,000-38,000 or could it be higher? Because I understand that there'll be a higher share of scheme patients when you start off. So any color would be helpful.
No, I think Thane and Bangalore, the ARPOB will be similar to what we are delivering at Sunshine and at Telangana cluster, which is to the tune of 60,000 per bed per day. We believe that will be the case both in the case of Thane and in Bangalore. In Nashik, what we have projected or what we are seeing is to be similar to what we are seeing in Nagpur, which is around 35,000 kind of an ARPOB.
Okay. And given Nashik commissioning is scheduled to happen in this quarter, and then there'll be some losses that's going to come from there. Will you expect to maintain the kind of margins that you've delivered in the first quarter for the entire FY25?
Yeah, I think the losses that will come from Nagpur will be marginal. From Nashik will be marginal. It should get offset with the growth that will come in from Queen's NRI, which is a new acquisition, growth that will come from Sunshine and Nagpur and Telangana. I think the margin profile will continue to remain the same.
Okay, and last one. So apart from Mr. Srinath Reddy, who's joining as Director of Business Strategy and M&A, you also mentioned Dr. Nitish Shetty also joining us. In what exact capacity is he coming on board?
He will be the CEO of the Karnataka cluster.
Okay, and the equity that they will own, will that be at the overall Karnataka region level, or will it be limited to the new Sarjapur hospital, which you're planning to?
It will be for the entire Karnataka cluster.
Okay, understood. Thanks for taking my questions.
Thank you. The next question is from the line of Tushar Madhudhani from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So just on this Andhra cluster, if you could just help understand let's say the pecking order of the profitability of different units.
So you have 3 units in Andhra that deliver a 30 plus kind of a margin. And then you have another 4-5 units that are around 18 to 20% kind of a margin. So as they mature and they grow, we believe that the entire Andhra cluster could expand to a 28% kind of an EBITDA margin. This could happen over the next 24-36 months.
So which are the ones which are pulling down the margins?
Right now, one unit they are all in their growth phase. I won't say pulling down the margins. The unit in Kurnool, the unit in Vizag and Srikakulam are where they're still in their growth phase, because of which the margins are still on the lower side.
Understood. And similarly on the Telangana clusters, if you could also explain that.
So Telangana, I think both the hospitals are mature. We're continuously investing in new areas of treatment and new doctors. And also a lot of the corporate cost expansion has happened in Telangana for the group. That is reflected in Telangana for the group. That is why you see a dip in the margin. But there's a drag of almost 1.5 crore from doctors who have been recruited but yet to see maturity in those, or yet to even break even.
Understood. Thanks for your thoughts.
Thank you. The next question is from the line of Charul Agarwal from Bank of America. Please go ahead.
Thank you for taking my question and congratulations on a good set of numbers.
My first question is regarding the Nagpur facility. So we have seen a new competitor enter the market. Do we see any kind of competitive pressure in terms of doctor hiring? And you also announced that you might be looking to expand in Nagpur region. So any sense on what is happening from a competition perspective in that locality?
I think our doctors have been approached by competition, but the good part is we have not lost anyone. And in spite of competition coming, I think our growth has been phenomenal. It's been the best growth over the last few quarters. So we don't see. I think there is space for all of us. We'll continue to grow, and I hope our competition also continues to grow.
Thank you. So my next question is on the insurance bit. You did mention about insurance being a significant growth driver in your opening comments with some regulation changes. I just wanted to understand that if we think of it from a metro city versus a tier 2 and beyond approach, I think in the past you have highlighted that insurance is more of a tier 1 and metro city phenomena. But if you think of it in terms of your growth drivers, you see insurance is a significant growth driver specifically for the tier 2 and beyond?
Not in tier 2, tier 3. I think it's still growing very slow there. There is a significant growth in metros and tier 1 only.
Okay, and how do the recent government steps that you mentioned, how do they change outlook for things? Is it going to be significant?
Your voice is not very clear. Could you please? There's a lot of disturbance.
Just a minute. Is it better now?
Yeah. Better.
Sir, I was asking that since you were mentioning the recent changes in the insurance norms in your opening remarks, could you help us understand if that changes anything significantly for KIMS in terms of growth drivers?
No, I think it is mentioned in the opening remark that only that the Union Minister had proposed that the GST, which is there on the insurance premium, can be reduced. It is not yet implemented.
It's only proposal by the Union Minister to the Finance Minister, removal of the GST, which is 18% on the insurance premium. Suppose if they remove that in 18%, there are more and more people will come into the insurance bracket. So that then affordability will become a good challenge for them.
Got it. And so one last question, if I may. So you have announced quite a bit of expansion plans, and you're also building upon it. So I want to understand, how much more headroom do you see in terms of adding more capacity? What would be the metrics basis which you could decide that now from an expansion mode we might want to consolidate a bit? So how should we look at it from a medium to long term perspective?
So presently we are. So Charu, I was answering your question. We are currently managing 4,000 beds. We can expand the number of beds, but the limit which we are having is the capital constraint. We have said we don't want to exceed a debt equity of 0.75:1 and debt EBITDA of 1.75:1. As far as we are within that range, I think there is no other limitation. Bandwidth is already there. The only limitation, as I have said, is the capital constraint. At that point in time, we will reconsider our decisions if any expansions are in pipeline.
Got it. That is all from my side. Thank you so much.
Thank you. The next question is from the line of Parvati Rai from Equitas Wealth Advisory. Please go ahead.
Hi. Thank you for taking my question. A quick on the margin. So while we did say that it's sustainable for this year at the current quarter level margins of around 26.5, despite the newer, the Nashik coming in, where the loss will be offset for next year, given Q4 and Q1 would see a couple of other hospitals coming online. Any color if we can have this? What would be the sustainable EBITDA margin with these newer hospitals coming in?
I
I think as soon as this financial year, we have Queen's NRI that's coming in. And we also have, which is already an EBITDA generating asset. We have Nasik that could potentially have some drag for the first 2 quarters. And that's why we said, given that both of them would get set off, the margins of the other units will continue to sustain.
Yeah. So any color possibly with the other units? So I mean, from next year perspective as well, should we see this level sustaining, or will there be a slight change with the new hospitals coming in?
So the next year, I think the growth will continue to sustain for the existing hospitals. There'll be incremental growth coming in from Nasik and Queen's NRI that has been acquired. But there will be drag on Thane, Bangalore, both the facilities in Bangalore. We're expecting, or we've modeled a drag of not more than 30 to 40 crores across these 4 facilities, across these 3 facilities.
Okay. That's good. And with respect to the average revenue per operating bed, while there have been questions and you did kind of give your views, so for the full year, so while this quarter has seen a massive jump and we understand the change that you spoke of and the driving factors, will this kind of level sustain, or again, so what is the sustainable ARPOB for the whole year that you're looking at, largely, given the mix change or the scheme or the changes that we saw, the insurance or the incremental revenue picking up?
I think these numbers are sustainable at the same range. 38,000 is 36 to 38,000 is a sustainable number.
Okay. Great. Thank you.
Thank you. The next question is from the line of Alankar Garude from Kotak Institutional Equities. Please go ahead.
Hi, good morning, everyone. So first question for Nasik, Thane, and the 2 Bangalore hospitals. From where are we hiring the doctors? Is it largely some other corporate hospitals or relatively smaller hospitals?
A mix of both, Alankar. Largely in Thane, it's a mix of 50-50 from closest competitor and smaller hospitals who are willing to consolidate and move to a bigger hospital. But in a place like Bangalore, it will largely be from similar competition.
Understood. And Abhinay, any thoughts on the seniority profile of the doctors, and how would you compare the seniority profile to, say, the Secunderabad hospital?
Secunderabad is a 20-year-old hospital, so it's very unlikely to have that level of seniority across these facilities. But we will find a similar skill set that we have at KIMS Secunderabad in both Bangalore and in Thane.
Understood. The second question is on Secunderabad. Now, you had mentioned earlier, some time back, that there is also a possibility of doing brownfield in that hospital if the need be. Now, given the lower ALOS as well as lower occupancy, would it be fair to assume that there will not be any expansion in Secunderabad over the foreseeable future?
So, Alankar, in our previous call, we had mentioned that of the 1,000 beds that we have in Secunderabad, 200 beds are present in Block 1 and Block 2. The current situation, and that's a 20-year-old facility. Though we have those beds available, they are not in a state that can be properly utilized for growth. Hence, we have demolished Block 1, Block 2. We're building a new tower there, which can accommodate an incremental 350-400 beds, but we will operationalize them or we will incur that capital over a period of time as and when required.
So, precisely on...
Yeah, sorry, go ahead. We are building the structure to have an incremental 300 beds, but as and when required, we will start utilizing them.
Understood. So the question essentially was, from an operationalization standpoint, do the plans get delayed a little bit given the lower ALOS and lower occupancy now?
No, there are no plans to delay it. There is a lot of services that we want to start, and we are constrained with space. It could not be beds, but there's a lot of outpatient daycare services that we want to start, but we are constrained with space. So we will continue to go ahead and do that.
Fair enough. And one final question. As on date, at a corporate level, how many doctors would be under the equity model? And if you could bifurcate those between the listed company and the subsidiaries. And maybe the second one there would be, what was the minority share of EBITDA in the first quarter?
Minority share is around 10-11%. But on the share of doctors, we'll come back to you.
Okay. That's it from my side. Thank you.
Thank you. Ladies and gentlemen, this will be the last question. It's from the line of Aditya from Sovilio Investment Managers. Please go ahead.
Hey, good morning, everybody. So I don't know if this was asked before, but my question was more on the lines of, there was this government order that, they try to cap the prices of private hospitals. So anything on that?
Nothing. I think, basically now the Supreme Court has requested the central government or asked to look into that and do, and then later on all these hospitals has been contested, and then they were looking at it. I think looks like it is a standstill, and few governments are working. Is the state government they should be able to work and negotiate with the prices. Which even before we said that it is a very tough job to do all these things. It's a very complex way of dealing these things. We cannot be able to fix the pricing. So I think that may not be any risk in the healthcare as of now in India.
Sorry to interrupt, sir. The current participant has been disconnected. As there are no further questions from the participants, I will now hand the conference over to the management for their closing comments.
Let me summarize all the questions that have been put forward and knowledgeable questions. And thanks for asking all these questions. Initially, when we were talking about the affordability, accessibility, quality, a couple of decades back, there was not many players in the healthcare who are doing all these variety of patients to take care of the remote places. That's why we are putting. Now many healthcare players are coming, small hospitals, and all these scheme patients and lower patients, lower socioeconomic group people are getting treated in those areas. It has been well strengthened in the entire country thanks to all the Ayushman Bharat or the Aarogyasri. So now insurance penetration is increasing. So once the insurance penetration is increasing, then again the affordability increases and the ARPOBs and average revenue per bed keep on increasing. It is not that we really particularly to improve these things. It is automatically shift is happening in the Indian healthcare. And as we all mentioned that before, whenever we look for any acquired new geography and new acquisitions, we will thoroughly investigate and put forward and how much is the growth we are going to anticipate by those particulars. But even then we keep telling and then we have been proved time and again. One time 19, we acquired about 3 hospitals, the Ongole, Kurnool and Anantapur. We could be able to turn around and continuously grow. In the last time again we took about 3 hospitals, Nagpur, Sunshine and 2 Sunshine hospitals in Hyderabad. Even though Sunshine Hospital was a single branch dominated one, people will have some reservations how we are going to change. And we thoroughly done a lot of due diligence and then investigations even in Nagpur. So that's why we could able to turn around now, and that gives a lot more confidence and comfort towards our investors. And the other important thing, now we are going, having been shown turnaround in Nagpur, Maharashtra, now we are going move forward with Nasik and Thane. The way which we have been anticipated in Nagpur, we also should be able to anticipate. Now the Karnataka cluster we are going, and then we got a good management skills with our efforts and brand which is in Karnataka also. KIMS has a lot of Telugu speaking people are there. With these both combinations and we can turn around the Karnataka cluster. And the more important, whenever we go, we always, from the beginning, we want to partner with few of the doctors and management so that they will also have the skin in the game, at least 15-20% of that entire cluster. And that way we can able to move on. As we promising in the mother and child and the oncology in Andhra unit, so we are doing that. Whenever we get an opportunity, some of the things we will be able to slow down, take over the opportunity because of the cash flows mismatch. That's why now we got the Vizag unit, which is a good one, what we feel. So these things will be able to looks and it's very promising. And then whenever based on the opportunities, the existing units that we need to be able to look, we will be able to channelize the capex so that it will be able to move forward. And the other important thing, when we keep on improving and the absolute number of bottom line may not continuously keep growing, because in the beginning the new units as comes, the percentage may come down, but the absolute numbers will keep going. And the ALOS and other things are in different seasons, different quarters. There are few important things. One are the elective surgeries, emergencies, and the complex procedures. In that quarter, if we have any lot more of emergency and complex procedures, the ALOS may little bit go. And if mostly on elective cases, the ALOS will come down, and then we are adding the new therapies where some of these things may not able to take longer time. That's why the ALOS will also come down. These are all the few important things. And as we mentioned that the capex and the EBITDA, which we may not able to be very, very cautious about it. Maybe in 2-3 quarters we may cross that limit what we have, but that will be able to set right after that. So we don't need, because the opportunities are there. Either I have two options, either I should be able to raise a QIPO, or I should be able to take a little bit leverage of the debt and then expand and come back to the normal. These are all the few that whatever is the good for investors, good for the company, we will be able to look into this model, and most probably we want to do with our own internal accruals and debt, so that the growth will continue to grow and the opportunities will be able to look forward. Thank you very much for patient hearing, and I'm sure that we satisfied most of our questions.
On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.